All right, well, good afternoon and welcome to the Sanctions panel. Hopefully you can hear me, right? The mic is on? Perfect, thank you. So my name is Miriam Radkovičová. I'm a managing director with Deloitte's Anti-Money Laundering, Sanctions, Financial Crime Practice. And I will be moderating today's session. If I look familiar to you, you might know me because I'm also on the BAFT board of directors, and I'm currently serving as the BAFT secretary and treasurer. Sanctions is a topic very close to my heart, given where I come from, but I think we can all agree that sanctions is a very important topic for both trade and payments. And we were actually joking just before this session, trying to figure out how to sabotage the other session and make them come over and join us over here for hopefully what's going to be a very useful discussion. Looking at the last 12 months of the last year, right, there has been quite an evolution in the sanctions space. A lot of shifts in the US sanctions policy, and just to highlight some of those, we have seen lifting of the sanctions on Syria, so quite a change, and we will talk more about that. On the flip side, the new administration has been focusing heavily on narcotics trafficking, cartels, Iran. We have also seen some new sanctions focused specifically on combating global fraud schemes. I'm sure you have heard of pig butchering, investment scams, right? And then with regards to Russia, last year was quite interesting. High volume in the other room. With respect to Russia, it's been quite interesting because while we have seen increasing sanctions against Russia from EU and UK perspective, US remained relatively silent last year until kind of the last quarter, right, when US sanctioned some of the Russian energy companies, Rosneft and Lukoil, in October. And so obviously a lot of stuff happening last year, a lot to talk about, and I have barely scratched the surface. But before we get into the details, I would love to introduce to you our expert sanctions panel. And I'm actually very excited about the composition that we were able to assemble for today, because we do have former regulators. We have the first line, we have the second line represented. So hopefully we will be able to have quite an interesting conversation and share different point of views. And in case you do have questions, just as a reminder, you can raise a hand. I think the room is small enough, and I believe we do have one mic, traveling mic. But much easier, please do use the Slido. I will be monitoring the questions throughout.
Slido to ask questions.
Yes, yeah. So you can also use that, and I will be monitoring the questions. All right, so first and foremost, the expert speakers. So sitting right next to me, James Cousins, Standard Chartered. He's the head of US Sanctions Program Management and OFAC reporting. James has been with Standard Chartered for over 16 years and has previously held roles as a senior financial crimes intelligence operation analyst in London and as a regulatory liaison for the US Supervisory Remediation Program. He's an industry leader in economic sanctions, including being featured as a speaker at the ACI New York Forum on Economic Sanctions. Sitting right next to him, I would like to welcome Laura Miller with Goldman Sachs. Laura is a managing director and a global head of sanctions and FCC financial crime compliance first line risk, where she serves as a key firm-wide leader on sanctions risk and related controls. Previously, she held senior leadership roles at Citibank and HSBC, and earlier in her career, she also served as a sanctions compliance officer at OFAC. And last but not least, I welcome Joe Twinem with BNP Paribas. Joe is a director and a senior OFAC sanctions advisor to the bank's OFAC sanctions program, where he's leveraging his prior experience within the US government. Prior to BNP Paribas, Joe spent 6 years with the US Department of Treasury, serving key functions within both OFAC as well as FinCEN. So welcome, very happy to have you, and thank you for joining us. So for the first segment of our discussion, I would like to build on top of one of the sessions we had earlier today, moderated by Nick. We talked about geopolitics and macroeconomics, and there is obviously a very clear connection to sanctions. So James, perhaps I start with you sitting right next to me. From your leadership position, right, how do you track and respond to these fast changes to geopolitical, regulatory environment, sanctions, and oftentimes conflicting regimes?
This is a great question with a lot of challenge, honestly. I think the biggest challenge that I have found, to start with, if I can sort of set the context, is banks and everyone involved in global trade, we're not just sort of waiting for the rules to land and comply with what the rules say. We're actually kind of managing the geopolitical situation kind of real time as best we can. And if you get that wrong, if you don't predict what might land properly, you don't have the right control environment, you don't have the right tone for the top, everything that we kind of will talk about, the consequences for getting that wrong are severe, as we've seen. Many banks have been has faced quite severe enforcement actions. So it's critical for a large financial institution now to make sure that you are kind of ahead of the game as best you can, kind of planning, understanding what geopolitical actions might take place, where those friction patterns are, and how you're going to sort of put controls in place and protect yourself, your clients, and mitigate that risk. In an extremely fast-paced environment that we found ourselves in from a sanctions implementation standpoint, having kind of like a game plan or like a game plan is critically important, right? So how do you actually go about reacting to fast-paced sanctions that happen real time? So horizon scanning is obviously important. It sounds obvious, but reading the news, keeping up to date with current events, understanding where political situations might arise, what action might be taken by different regulators. And we saw with the implementation of the Russia sanctions, with the invasion of Ukraine, just how fast-paced and difficult those sanctions implementations can be. And so from our standpoint, I'll talk a little bit through about what we did and how we managed that situation. And I hope we won't see a situation exactly unfold like that for many reasons, including obviously humanitarian reasons, but it's very possible with the kind of elevation of sanctions that we've seen over the last few years. So what we did at Standard Chartered, that was me that was referenced in the last last session. But what we did, we had a daily call once Russia invaded Ukraine, 6 a.m. every day for about 4 months. 6 a.m. Eastern time, because we have colleagues all across the world stretching through Europe into Asia. And we had about 40 colleagues on that call, starting with our global head of sanctions and his senior team, all of the regional sanctions teams, operations staff, our screening staff, first-line colleagues. And really the aim of that is, what has changed in the last 24 hours since we last spoke? What are the sanctions that have been implemented, both from a US, UK, EU perspective? Maybe there's another regulator out there that we want to look at. What does that mean? Digesting what have happened, or what has happened in the last 24 hours. What does that mean? What's the impact? And then what are we going to do about it? How do we actually put controls in place? So the obvious ones that should be in place now that are automated are kind of like your vendor screening list, really simple stuff, making sure obviously those relationships are happening, you don't have any issues with that. That's kind of basic stuff. But then there might be other actions that you need to take, and obviously having clear accountability across the executives that are on that call to make sure that they can deliver whatever it is that we determine that we need to deliver. And then, as Miriam mentioned, from my perspective as a UK bank, so we're a foreign branch of a UK bank in the US, we obviously have to look at OFSI from a UK regulatory perspective in terms of what they are doing now. There's been a lot of work in the last few years to try and bring those two organizations, or two regulatory organizations together. But for various legal reasons, there are differences. And so the challenge for us is OFAC may come out with an executive order, the executive branch might come out with an executive order implementing US sanctions on various companies, entities, parties, wherever it may be today. They may also issue a general license. The UK may not have followed suit. They may follow suit a day or two later. They may have led a day or two earlier. They also may issue general licenses for the same kind of activity. Maybe there's slight variances across those general licenses, and also the implementation date of the general license and with the termination date can vary. So just in that very small pocket that I've just kind of very quickly run through, you can kind of get an idea of the complexity of these kind of regimes and dealing with it as a big international bank. So the next thing that's critically important, obviously apart from executing everything that I've just walked through, clear communication is absolutely critical, not just for us as a leadership team to understand the impact, what we're going to do, but also communicating that to our staff across all levels of the organization. We all have to be singing from the same hymn sheet. We need to make sure that our colleagues in the first line are engaging with our clients, so our clients are very clear on the new updates. Also, do we have a risk appetite statement, a policy statement that might be above and beyond what the law specifically says? I want to make sure we communicate that to our clients so they're very clear in terms of where we stand. That's really, really important. And then scanning enforcement actions also is really important. So, sorry, I'm taking up a lot of time, but the enforcement actions that regulators put out are critically important to understand where OFAC or OFSI in our scenario may be looking and focusing their energy. If you look in recent enforcement actions from an OFAC standpoint, they're looking at IP addresses, geopolitical sort of issues. They're also looking at potential entities utilizing law firms where they may not have given that law firm all of the information that they might need to come to a decision, almost to give themselves a blanket of protection to go to the regulator and say, hey, I got a legal opinion. They agreed to me. I did nothing wrong here. You've got to be very, very careful when you do get a legal opinion. It's not just a blanket. And we're seeing that through enforcement actions. And then, I don't know if anyone saw this last week, but the Bank of Scotland were fined by OFSI last week in a really interesting fine. It wasn't a large fine in terms of the value, but the fact pattern behind it was very interesting. It was a Russian designated individual who had opened up an account utilizing a government-issued passport with a name variance to the designated name on OFSI's website. So obviously begs the question around screening. The government-issued identity document that was provided for the onboarding team differs to what your screening tool has. And there are other failures within the kind of investigation, but again, understanding where your regulators are at. Are there lessons learned? Do we need to take action? Again, folding that into your compliance program is critically important. I took a lot of time, I'm very sorry. That's just a whistle-stop tour of a very few things that are kind of the top of our mind, focused on kind of from Russia forwards. And I'm sure these guys will add to that.
Obviously, very, very complex. Thanks for sharing that. Joe, maybe I turn to you. I mean, you have seen both sides. You spent years at OFAC. You were instrumental in drafting some of the sanctions programs on Syria, on Russia, and now you are on the financial institution side. Like, what are some of the challenges that you are now seeing being on the private side?
Thanks for the question. This is such an important question for us because we recognize that sanctions as they continue to broaden in their use, impact daily events, the global events. More often when we see global events happen around the world, there's a sanctions implication. Just a few that come to mind from my past. I don't know if everyone remembers back in 2021, the takeover of Kabul in Afghanistan by the Taliban. Taliban was a designated designated terrorist organization. We also had the earthquake in Syria that happened back in 2023. And then all of a sudden, as a result of that, there's comprehensive sanctions on Syria. There's a full embargo. And then all of a sudden, there's a huge need, a swell of need for humanitarian aid. And presumably, a lot of financial institutions that were banking big international organizations or NGOs that were trying to respond to that had demands. We have money that needs to go through. There are people starving. There are people without homes. And then as James mentioned before, the Russia invasion, all of a sudden global events happen and sanctions are in the way in a way that hasn't been the case before. And we as sanctions professionals are stuck in the position of saying, how do we mitigate this risk for the bank or for the institution that we work for as quickly as possible without causing too much internal damage? And I think, that flipping the question on the head, how do you respond to? I think the best way to respond to some of these global disruptions related to sanctions is actually by having a really good plan in place ahead of time. If you start planning for these crises to happen and how you're going to act the day that they happen or the day after, 2 hours after it hits CNN or the Wall Street Journal, you've probably already shot yourself in the foot a little bit. And I think part of the strategy that I think I've tried to implement is by hiring a team that knows Washington. When I was inside OFAC, I saw that decisions on the Hill, on Capitol Hill, made a difference. That moved the needle in terms of sanctions. Sometimes it was an individual in a presidential administration that just had a lot of influence and had a pet project that they wanted to see implemented in terms of sanctions. And so if you have a team that understands the way that Washington works, the way that sanctions are developed and they come about, it can help you to anticipate some of these things happening, and to the point that James made earlier, to kind of put in plans that try to respond to that risk proactively. Another thing that I would say is to hire regulatory expertise. You know, we're in the age of AI today, and I know James mentioned this as well, but AI, at least today, maybe in the future, it will be a lot more powerful in our industry, but for right now, it's pretty limited. And in a space where there's a lot of incentive to winnow down your compliance program as much as possible and make it as efficient as possible, and to make trade-offs for AI or for other tools that may reduce your personnel needs, regulatory expertise is still king in this industry. The way that OFAC has been implementing U.S. sanctions, and the way the courts have been interpreting sanctions laws and executive orders, there's a huge history of that, and it's important to be able to understand all of those dynamics of the way that OFAC has interpreted its own authorities and the way it's implemented them, in order for you or your teams to be able to effectively say, today, this is what happened, these are the risks, these are the interpretations that are relevant, and to pivot nimbly in order to respond to some of those risks.
Awesome. Laura, maybe I turn to you. I mean, we have talked quite a bit about the rapid changes in sanctions, the keeping your program nimble to be able to react quickly, right? What happened in the last 24 hours. Knowing how the U.S. Administration priorities are shifting, right? Like we have seen a lot of focus on Venezuela, on China. How can institutions prepare themselves better for what might happen going in the future?
Yeah, so I think scenario planning ahead of time is a key one. Like obviously, all of us will put together our SWAT teams for when those sanctions are announced to deal with them immediately. But I think the horizon scanning that James mentioned is critical, but also continuing to engage with your government affairs people, your regulatory colleagues, so we keep an open dialogue with OFAC and others to ensure that we are interpreting and bringing issues to the forefront, so that when they are thinking about the next tool in their toolbox, they know that it may have a significant impact on us. And then finally, utilizing your first line, like at a financial institution or any corporate, you've got business people who are experts in their product or certain jurisdictions, right? And so as we continue to watch what's developing in the news and looking at emerging risks in other places, it's important to keep that dialogue open with your business people to understand what are they seeing. Often they're sending us Bloomberg articles before we even see anything about something that could happen. And so keeping that open dialogue is really key, and ensuring that you're understanding where your risk could manifest and how impactful or not something could be.
Yeah, awesome. And I think your answer kind of also ties, I'm going to pivot a little bit and actually address the question that we got. Thank you. Because I think this is quite an important question, and we had some conversation right on this topic just before the panel. At what point does de-risking stop reducing sanctions risk and start damaging legitimate cross-border trade? Anybody would like to pick it up first?
Sure, I'll pick it up, because you're quite right, Miriam. We're just having a discussion over lunch about this exact issue, really, and kind of how different institutions deal with sanctions risk in terms of cross-border trade and everything that goes with that. So de-risking is obviously a critical, important part of a sanctions program, I would say. If you identify a client that has presented sanctions risk and you evaluate that, and the set of facts essentially state that the risk is outside your risk tolerance, potentially they're an egregious actor, and they've circumvented sanctions, they've been an active participant, then it's quite clear that that's someone that you don't really want to bank, and that is someone that you should essentially be debanking. But on the back of everything that we just talked about, and a lot of FIs having faced significant enforcement actions, there is obviously a risk of overcorrecting. And so what you want to avoid is anything appearing as a red flag, and the answer to be, well, we're not going to touch that anymore, because there could be legitimate reasons behind that. Potentially, it could be a client of yours I'll use India as an example, exporting goods to Dubai, and they've sold goods to a party in Dubai completely innocently. They've used a shipping company to arrange the logistics for them. That shipping company is in partnership with the entity, at least the front entity in Dubai, and actually the goods have gone to an end user in Iran. The client that we might be dealing with, facing off with India, may have no idea about that. Now, there may be certain things that they could do in order to mitigate the risk in the future, but the answer shouldn't just be, you're a bad actor, get out of the bank, essentially. And I'll flip the question slightly if I can as well, is another risk that I thought about is if every bank simply debanks parties, where do they go? So they still need to utilize the financial industry, right? They still need to utilize banks. And actually, there's been a discussion that I've had with the regulators in terms of, do you really want us to exit all of these sort of clients? Because we can feed you intelligence on them. We can put controls in place and we can feed you intelligence which would actually benefit you. But at the same time, we need to have reassurances that if stuff does go, that's the trade-off. That's really challenging. So it's a huge topic of conversation at our bank, certainly, and I'm sure Joe and Laura might have something to say about it as well.
I would just add to that, the overcorrection point is a big one. And I think that it's about educating clients. So I think those of us that are at a regulated financial institution, the bar is up here. And we often are dealing with clients, maybe mid-tier financials or corporates that just don't have the sophistication in that space because they're not regulated as heavily as we are. So a lot of it is dialogue with clients when we do see things happening so that they can correct, they can understand where our risk tolerance is, as well as our own regulatory obligations that we obviously expect them not to be bringing things that would cause us to breach.
Yeah, and I think also just one of the last things we discussed also over lunch was just kind of listening to, quite interesting how every organization has a bit of a different process, how much of the final decision on de-risking and exiting sits within the power of the second line versus how much of that is a communication with the first line and perhaps escalation to senior committees for final decision making. I will put the second question, thank you for that. I will put it on hold just for a little bit because we will talk about technology. So we will come back to that, I'm not ignoring you. But maybe we shift a little bit away from the geopolitics now and shift focus again on the US administration, because what we have seen over the last year is a shift in the way that they implement sanctions. And in addition to what we've been used to historically, the traditional sanctions program, we are seeing them using new tools as well, right? I've mentioned at the beginning the drug cartels, the transnational criminal organizations. Laura, maybe I start with you. Like, how do you, as an institution, do you need to pivot how you manage your compliance program to align to that?
I mean, the answer, of course, is yes, but it's a little bit more nuanced than probably what you expect, especially at a financial institution. We're, at least most of us, are not out there just banking narcotics traffickers and terrorists. And so we, always start at the place of, well, that's not in the demographic of clients that we would be having, but let's look further down the chain, or what are the more attenuated sort of connections that we may have, whether it's through enhanced due diligence that we see clients of ours may have affiliations with companies that we would have concerns with. Now, of course, there's no KYC obligation to do KYC on your customers, but again, like where you're seeing certain red flags, and I think it's really important too that outside of the sanctions team, it's very important to coordinate with partners in AML and other groups that are seeing transaction histories, that are putting together trends and seeing things in a way that we wouldn't necessarily do so because we are preventative, right? Sanctions is meant to be preventative. So we're often relying on intelligence from other parts of the bank to be able to say, like, do we have red flags in other places? A recent example that came up is like we often will partner with other teams in compliance to do forensics in certain places. So for example, we are looking at like our shipping population, right, from a number of perspectives. Is it Russia sanctions evasion? Is it narcotics trafficking? We were often doing some of those deeper dives in particular industries or areas that would help us like build out and understand, do we actually have risk in these places, and how are we going to address it?
Awesome. I would like to kind of continue on the topic you started, which is like the collaboration with the AML, right? And I know that during the prep sessions we talked about this convergence of sanctions with tariffs, with export controls. James, Joe, would you like to add something to that as well?
Yeah, no, I think, it's interesting that if we look back at the history of sanctions, sanctions used to kind of operate a little bit in a vacuum. There were export controls out there, but sanctions was kind of a unique instrument, and it was relatively kind of limited, as we were describing before. List-based programs. If you need to know if something is a problem for OFAC, you look on the list, and if it's not there, you're fine. That's not the world we live in today. Like, there are still some of those list-based programs, but some of the things that have been really important for us to manage recently have been like securities transactions, and certainly Laura has more comprehensive knowledge on this than I do. But what OFAC has done in the securities space recently with the Executive Order 14071, kind of the new investment prohibitions and the designation of the NSD and the MOEX in Russia. Those are things that don't have a lot of precedent. And the amount of guidance out there in OFAC's website or in other forums on what is a new investment and what does maintenance look like, and things that are specific to actual transactions that we as professionals might see are relatively limited. And so it's been really important for us to ensure that we're benchmarking with other financial institutions to ensure that whatever the industry practice is that's emerging is consistent with what we're doing in our institution, and it's been important to know that who our vendors are, to make sure that we have the best vendor, that we're not just thinking about price, but we're also thinking about value, and then also to communicate with our business lines. It's oftentimes in sanctions compliance shops, I think there's a lot of generalists, people that know sanctions and know generally how they apply to specific types of transactions, whether it's trade finance or securities or traditional customer facing banking, and being able to engage with those counterparts in the business, I think, is a critical step in order to be able to protect against those risks.
I think if I could just add to that. Sort of integrating your second line with the first line colleagues in terms of open communication, sharing kind of experiences and your skill sets, but also engaging directly through them with your clients is critically important to bring them along that journey as well, and to manage the risk. And I won't embarrass the bank or the person in the room, but I was at a meeting on Monday with a bank, came in to do the usual kind of annual review, and the first topic of conversation was thanking the compliance department, which doesn't happen and hasn't really happened, for the engagement and sort of the shared learning and the kind of influence that they had that helped both institutions and also other institutions across the industry with a very specific niched issue that we were dealing with. And so that was really kind of eye-opening to me, and it really kind of demonstrates the value add that the second line can have with not only your first line but also our clients. And so I just want to say that's also a really important part of kind of managing that aspect as well.
Yeah, awesome. And I think what you were talking about also kind of ties a little bit, maybe we pick up the first question here. What is the risk acceptance tolerance for clearly non-sanction activity to avoid decosting, ops de-risking? Any comments on that?
So, I mean, obviously every bank is going to have its own risk tolerance, right? And what I think, it's hard to say, like, I would think most banks are going to distinguish between non-sanctioned activity versus what could be higher risk activity that is permissible, but from a cost perspective is too much, right? So we may make that decision to say, like, the cost outweighs the benefit. And that's also a discussion that we have with the first line about the commercial reasonableness of it. One other thing to add there is like for those in the room who are more on the corporate side, the trade side of things, like talk to your bank before you end up doing a transaction that the bank blocks or rejects or otherwise says this is outside our risk tolerance. Like it's important to have those conversations so that you understand where your financial institutions are on that sort of risk spectrum.
Yeah, and I think one thing you said is very important, which is the exit, right? The risking is not obviously has to be tied to sanctions. Like that's where it's kind of a hard line, but it doesn't necessarily have to tie to sanctions. Like even if the activity is not necessarily sanctioned, there could be other costs related to the compliance processes that have to still happen, which might just not make business sense. Right?
Exactly. So like, Standard Chartered, you have a big trade finance business. Goldman Sachs, we have consistently said no to trade finance because the cost to set up a brand new program specific to that is not something that we're willing to take on, given the risks associated with it.
Yeah, perfect. Okay, maybe we move on and then we will come back to the questions on the monitor. I would like to talk a little bit about technology adoption, right? And we had one of the questions, which I think I took off the list, but definitely we will talk about this. Use of AI, advanced analytics, automation, right? Can have huge impact, right? And lead towards transformation of how we do sanctions compliance today. And and maybe I start with you, Joe, right? Because you've made the statement around, AI can only get you that so far. But there are areas within sanctions compliance where we can have, and we already are seeing big gains with using AI and other technologies. Would you like to kick us off with that?
Yeah, no, absolutely. I can just reflect on some of my own experience being exposed to kind of the uses of AI with respect to sanctions compliance. Certainly, AI is an incredible tool, and it seems as though right now we're only on the beginning of what the potential, what the possibilities are. And so there's a lot of incentive, I think, for folks in our industry to take it on as quickly as possible, to be an early implementer and to invest heavily. And as with just about everything, it seems like that we work on in our industry, there is some risk to that. We don't know where the ship is going. We don't know how valuable it will be. And so I think in light of those facts, there is some risk of over-reliance on AI. Today, certainly for kind of rote tasks that you have to do regularly the exact same way, whether it's filtering or screening, there are AI tools that are very well calibrated to those needs. But when you get into the kind of higher thinking or the regulatory interpretation elements of AI, the tools that are commercially available that I'm aware of tend to pretty quickly break down. In contrast, I think most of us as sanctions professionals, maybe I'll just speak for myself. What I've seen is that many sanctions professionals, if it's unclear in guidance or regulations whether something is sanctionable, and it touches something that looks or smells like sanctions, you do the kind of sniff test that someone was describing earlier, and you say, yeah, probably not. We shouldn't do that. But AI, in the experience that I've had, has actually been very much on the opposite side. I need to produce an answer, so therefore, let's just say it's authorized, or that it's not prohibited, because I can't find a prohibition. And so I think in that way, AI today reminds me, at least some of the commercial tools that are available right now, reminds me a little bit of an intern. Like they can do some really important stuff. They are integral to the good running of your sanctions compliance framework, but you wouldn't ever ask them to do something that's very high risk. And as I said before, I think we're probably emerging into a space where that's not the case anymore, that the degree to which they're able to do very complicated and competent analysis is increasing. But I think with all of the excitement of running towards AI, we still do have the risk. OFAC is out there, and they're going to take enforcement actions against financial institutions that violate, regardless of if the guidance on which their violation was predicated comes from AI. AI or comes from another source. And so I think we as as sanctions professionals have to be really careful that we don't lean in too far too quick, that we build in AI as a redundancy that layers on top of the technical resources that we already have, the personnel with regulatory experience and all of the kind of architecture, the framework around sanctions compliance that doesn't rely on AI, the more traditional tools, and then continue to move forward as the risk reduces on that side. I don't know.
Yeah, I think the key word is governance. It's a big topic all the time, and it's like setting those guardrails as to how AI can be used, continually testing it. So when, obviously you're going to do testing before you go live with anything, but it's the continual testing. Does this continue to make sense? Working with model risk management and others to really look and make sure that it is fit for purpose, especially in a world like sanctions that can change instantly. So yes, it can give great efficiency for what has historically been the most inefficient process, sanction screening, right? You get so much crap. And historically, you've had to deploy resources, human resources, to look at those alerts. Now, we can apply machine learning in a responsible way with clear oversight, testing, all of that to reduce the amount of time it takes to look at alerts, but ensuring that you're still getting the stuff that you want to see, ensuring that you're not fully removing the human element altogether.
Yeah, go ahead.
Yeah, and then just picking up on that, Laura, I'm glad you said it, because sanction screening is wildly inefficient and largely ineffective in many ways. And the reason I say ineffective is because if you're a bad guy and you go on a sanctions list, you're not going to be transacting in that name, right? So sanction screening automatically after a day or two for that specific entity or party almost becomes redundant to an extent. But yeah, a lot of noise in the system. And as sanctions ramp up and as I talked about it earlier, the UK, for example, has followed OFAC's lead, strict liability regime. They're now creating more designations. So your noise in the system, your number of alerts goes up. And that has been millions of dollars worth of people and resources and time and mistakes. Humans make mistakes. So the more work you have, the more mistakes. So all of that is where technology can be really, really useful to us. But I would agree with both of you, what you said, really be cautious with how far you go with technology. And Mr. Manchester, my very esteemed ex-colleague, said in the last session, pushing a button isn't the solution. You have to have people still involved. And one area that I don't think we have an answer for this yet is a lot of people, myself included, and probably the two of you, sort of came up through the industry, if you would, and through the system, through junior roles. Technology is posed to remove a lot of those junior roles. So I'm a little bit cautious and scared, if you will, in 20 years' time, where are the experts going to be sitting in our seats? Where are they going to be trained? Where are they going to learn the job? So we've got to be really careful about the implementation of technology. 100%, Laura, that's exactly where it should be, but it's going to creep into lots of different areas, and we've just got to be a bit cautious in that respect.
Yeah, absolutely. And I love what you said about governance, right? I just want to come to that topic just for a second. I have seen firsthand financial institutions that got in trouble with their examiners exactly because they put in place an AI agent to disposition the hits. They had governance in place when the agent was implemented, but then it was running free for a period of time and this, auto-closing 95% of all of the alerts, right? And when the examiners asked why or how, there was no clear explanation. And so now they were actually, not to scare anyone, but they were literally made to completely shut it down and go all the way back to having purely humans making all of the decisions. And I think it's going to take a while before, the examiners and everybody gets comfortable so that, introduction of AI in a responsible way can come back. All right, we only have a couple minutes left, so I would like to finish with one last question to all of you, and then if we have time, we will try to also address some of the questions on the screen. But what I want to ask is, obviously, a lot of changes. James, you talked about some of the worries already, so you're worried for the future. But assuming we are all back here next year on this sanctions panel, what do you think we're going to be talking about? And I start with you, Joe.
Ooh. I've never been good at the crystal ball question. But I think putting my old policy hat on, if I had to guess, I think a lot depends on the midterm elections. If the Republicans retain control over both houses and of course the presidency, we could see a lot more excitement, maybe related to Iran or Cuba, as has been stated, could happen before. And if Democrats take either house or both, I think it could be that there's a lot more reconciliation between the two extremes, trying to make policy that makes sense, whether that means more relaxation on Venezuela or less relaxation on Venezuela. I think a lot also depends on where Russia goes. Right now, we're in the middle of long back and forth between Russia, Ukraine, and the United States. And if that ends the way that I think the current U.S. administration wants, then that we could potentially see a really significant reduction in sanctions, and that could be really interesting topic for us. And the same is true on the other side. If it breaks down, we could see, there's still a lot of room there on the Russia program to increase pressure in ways that would be, I think, hard for the industry to digest, just like the securities framework was. So I think those are some of the key topics that I would watch out for.
Okay, thank you. How about you, Laura?
So not just in the future, but now everybody's talking about crypto and digital assets. It is a huge focus for my team, not just in sanctions, but broader financial crime compliance. Obviously that the way that the administration is going on the pro-digital assets stablecoin, it's a place that a lot of financial institutions were fairly conservative on, and now are being forced to catch up. Which means our compliance programs have to catch up. And so one thing that we're trying to focus on right now is like demystifying and taking the scariness out of digital assets from a compliance perspective, because obviously you talk to any consultant or anyone who is working in that industry, sanctions evasion and sanctions issues is probably the most prevalent issue in that space. So it's like, from my perspective, how do you balance the business moving forward, business growing in a way that's, again, responsible and dealing with issues in a new way? And what we're trying to do is look at crypto and digital assets more as just like any other new product that we would think about, rather than it being this sort of nebulous and really complicated and scary thing. So like taking what we have now from a control perspective and where do we need to potentially uplift.
Awesome. So James, I know you already said that you will be worried about how to train your next-gen sanctions leaders. Anything else on top of your mind?
Yeah, I think just piggybacking off what Laura said, looking at crypto, but from what the regulators do globally. So there was, again, I was in a meeting earlier this week where we were talking about the US regulation potentially prohibiting interest on digital assets and stablecoin, right? And if that happens, but the other regulators around the world don't do that, you could see huge capital flight. So I think that discussion and looking at the global framework of regulations around digital assets, I think would be quite an interesting kind of topic to see where that goes. The other thing we briefly mentioned earlier, but what happens with IEPA and the Supreme Court case being heard on tariffs at the moment on Capitol Hill. So that's really interesting, because the administration has used IEPA to implement tariffs, which is essentially an unlimited tax on the U.S. economy, essentially, like the U.S. importers and the U.S. consumers. And that's not what IEPA is designed to do. And so IEPA is the primary legal mechanism for implementing sanctions, right? Depending on which way the Supreme Court goes, that could have an impact on the ability of IEPA to be utilized as a tool for sanctions as it is today. So I think seeing the outcome of that, and it's a very delicate decision the Supreme Court have to make, I think that would be a topic of discussion as well in due course.
Yeah, for sure. Fascinating. All right, we have a minute left, so maybe we try some of these questions. The first one is very specific, so let's see if somebody can pick it up. How African financial institutions can have access to international commodities while correspondent banks supposed to apply exemption set by OFAC licenses? And I forgot my glasses, so apologies. Anybody?
I'll try and pick this one up. So I think if you are coming from the position of an African FI, you obviously need to have one or multiple correspondent banks, right? Starting off with understanding their risk appetite. Do they have a risk appetite to process transactions that are permissible under specific OFAC licenses, general OFAC licenses, or authorizations built in? Understanding the correspondent banks that will have the risk appetite to support that is your starting step, right? You don't want to be caught down the line of wanting to process these and you get stuck with, because a correspondent bank like Standard Chartered, as an example, might reject it because it's outside of risk appetite. So I think understanding that sort of platform up front is critical, and once you find the partner, open communication, information is key, right? Make sure you provide all of the relevant information up front and throughout the life cycle of the transactions that you're looking to process, because that's critical from a correspondent banking standpoint to evidence compliance with said authorization or general license.
All right, and we are actually out of time, so I'm going to thank our panelists, close the panel. I know we still had 2 questions that we didn't get to answer, so if you were the one that posed the question, please feel free to, during the coffee break, come and talk to our expert speakers today. Thank you.